Hello, good morning to this exciting day where we talk about businesses all around the world. It's another week of business and it's Business 360. My name is Blyden Okem. In Business 360 today, we'll look at the key features in the world of business. We'll begin the analysis from the expected data releases for this week. It should be a very busy week with US non-farm payrolls and earnings report taking center stage. Also, in the US, investors will also be following factory orders, job openings, and ISM manufacturing and services PMI. Elsewhere, the central banks in the United Kingdom, Australia, and Brazil will be deciding on the course of their monetary policy. We'll also get to talk about, additionally, the spotlight will be on the second quarter GDP growth rates for the Euro area, Italy, Hong Kong, and Mexico, as well as inflation rates for the Euro area, Italy, Netherlands, Switzerland, Turkey, South Korea, the Philippines, and Indonesia. China will release manufacturing and services PMI data, while Japan, Germany, the Euro area, and Canada will publish unemployment rates. Finally, in Africa, inflation rates, interest rates, and purchasing managers' index would be released accordingly. Now let's move to Africa and see what the standings are in the business world in Africa. The sluggish implementation of agreed taxation regulation and strict trading practices are once again forcing a decline in intra-regional trade in East Africa, costing the subcontinent's economy millions of dollars. Let's talk about East Africa. East Africa faced a decline in intra-regional trade, or regional trade rather. The subcontinent lost $1.8 billion in trade revenue from $5.4 billion in 2021 to $3.6 billion in 2022. According to a recent regional trade analysis, authorities have agreed on important policies but postponed their implementation. As a result, member states of the East African Community regularly violate the Common Market Protocol and work against regional integration goals by imposing non-tariff trade barriers, NTBs, and making recurrent requests for special tax treatment and exemptions. Quite concerning for East Africa there. Still in Africa. Against steep inflation, post-pandemic competitiveness, and a changing airline industry, Ethiopian Airlines is set for Vision 2035 growth strategy. The airlines is Africa's leading airline in terms of fleets and passengers. It was one of the few worldwide to have remained afloat during the COVID-19 pandemic without public bailouts or redundancies. However, the airline finds itself facing new difficulties, as CEO Mesfin Tasu, who was appointed to the role in March 2022, explains more. Let's hear from Mesfin Tasu.
Generate $6.1 billion of revenue. Compared to last year, the previous year, it's 20% growth. And compared to pre-COVID, it's 50, close to 50, that we have fully recovered from the impacts of COVID. The airlines are very optimistic and have placed order for significant number of aircraft. That will result in capacity dumping in the air transport industry, which will drive yield down, stiffening the competition on fares. So to overcome this challenge, Ethiopian Airlines will have to evaluate its cost structure. Fully replacing the jet fuel with SAF requires a big industry that will manufacture SAF in adequate quantities at every corner of the world. Today, there are few manufacturers in Europe and the US, none in Africa.
Those are different level of concerns for Ethiopian Air, but they've been such a decent airline in recent times. In Nigeria, Currency outside banks rose to 2.26 trillion naira at the end by 185.68%, 1.47 trillion naira between January 2023 at 792.18 billion naira and June 2023 at 2.26 trillion naira. Currency in circulation is defined as currency outside the vaults of the central bank, that is, all legal tender currencies in the hands of the public and in the vaults of the deposit money banks, according to CBN. It had earlier dipped by 235.03% to 982.09 billion naira at the end of February, from 3.29 trillion naira at the end of October 2022, on the back of the naira redesign policy of the CBN. Still in Nigeria. The Independent Petroleum Marketers Association of Nigeria, IPMAN, has commended Polaris Bank and Amadap Energy Services Limited for their collaborative efforts and strategic partnership that resulted in the recent importation of 20,000 metric tons of premium motor spirit into Nigeria. In a statement, the National Operations Controller of IPMAN, Mr. Mike Osatui, described the pioneering feat by Polaris Bank and Amadap Energy as unprecedented. He noted that they both made it possible for Nigeria to break the age-long monopoly in the downstream sector. He specifically commended Polaris Bank for fully funding the whole cargo to the tune of 13 billion naira, enabling the seamless transportation of 20,000 metric tons or 27 million liters of petrol to the country. Now to the World Finance Award. Zenith Bank PLC has been named the best commercial bank in Nigeria at the World Finance Banking Award 2023 for a third consecutive year. The bank also emerged as the best corporate governance bank Nigeria in the World Finance Corporate Governance Award 2023, retaining the award for a second consecutive year. A statement from the bank said the awards were presented to the Group Managing Director and Chief Executive Officer, Zenith Bank PLC, Dr. Ebenezer Eyegu, at the London Stock Exchange recently. World Finance is a foremost international magazine providing extensive coverage and analysis of the financial industry, international business, and the global economy. Let's talk about the first half of the year financial report. Indigenous Conglomerate Transnational Corporation PLC has reported that its revenue for the first half of 2023 grew by 31% and that it achieved commendable growth across major indices. According to its unaudited condensed consolidated financial statement for the period ended June 30, 2023, Transcorp, which has invested or has investment in power, hospitality, and all sectors, posted revenue of 82.1 billion naira in the first half of 2023 compared to 62.9 billion naira in the first half of 2022, while operating income also grew by 46% to close at 29.9 billion naira as of June 2023 compared to 20.5 billion naira in June 2022. Operating expenses for the period ended June 30th were 15.9 billion naira, an increase of 40% compared to 11.3 billion naira of the corresponding period in the previous year. In its financial report, Transcorp reported a 39% growth in profit before tax to 18.5 billion naira in the first half of 2023 from 13.4 billion naira within the same period in 2022. Transcorp's total asset rose to 495.3 billion naira, representing 12% compared to 442.7 billion naira in June 2022. It would be a good time to look at global economy and the standings, talking about economic data all around the world, but that will be when we return from this break, looking at the very finest of details in data releases for today, Monday, July 31st. Don't go anywhere. Beginning with economic calendar, data releases for today. Let's look at the calendar this morning. According to standings in the economic calendar, the perspective of the market has been totally different for many of the economies. Beginning with 2:30 a.m., Australia private sector credit month-on-month for June came out at 0.2%, previous standing 0.4%. But let's talk about the manufacturing purchases managers index in China, highlighted with red. It came out as at 2:30 a.m. It came out at 49.3 index level. Previous standing was 49 index level, indicating a slight improvement in the private sector in China. Furthermore, in the morning, let's look at the standings early hours of this morning. What the picture was for GDP growth rate year-on-year, advanced estimate second quarter in Italy, 9 a.m. in the morning. GDP growth came out at 0.6% in Italy. Previous standing was at 1.9%, indicating a slight contraction in that growth year-on-year. Similarly, GDP growth quarter-on-quarter, advanced estimate for the second quarter indicated a negative 0.3%. Previous standing was 0.6%, still indicating contraction. Furthermore, in the day around 10 a.m., let's look at what the standings were. Economic data for the euro area. GDP growth rates quarter-on-quarter, according to flash reports, for the second quarter in the euro area came out at a 0.3 percentage point. Previous standing was 0%, indicating a slight expansion in GDP growth. Also, year-on-year, flash report indicated that the euro area had its growth at 0.6% against previous standing of 1.1%, indicating a contraction in that regard. An inflation rate in the euro area, according to flash report, came out at 5.3%, and previously it was 5.5%, indicating an improvement in inflation and price of commodities in the euro area. Now looking at the talking points, sales statistically and data. What does a freight recession mean for the US economy? The rate of shipping containers is plummeting. The US consumers are still spending on experiences like travel and leisure. Asia to US container costs are 87% lower than at the same time last year. The CEO of Proper Trading, Scott Bois, has more regarding this. Let's hear from him.
Container and trucking rates have plummeted. Are signs pointing towards a freight recession? A freight recession basically means that there are fewer trucks delivering goods across America. One of the key factors contributing to the freight recession is a demand slump resulting from retailers jacking up purchases during the COVID-19 pandemic. Rates for shipping containers from East Asia and China to the U.S. plunged, while spot trucking rates fell again as consumer demand for goods remains weak. Though consumers are still spending on experiences like travel, leisure, and restaurants, Asia to U.S. West Coast rates are 87% lower than the same time last year. The freight recession is not a U.S.-only problem. It is global, starting in Europe, moving to Asia, and now most directly impacting the U.S. market. This is raising concerns that demand for consumer goods is declining and at a minimum indicates that retailers are forecasting.
Now to Asia, China's economy next. The official NBA's manufacturing PMI meaning the Purchasers Managers Index, was at 49.3 in July 2023, edging higher to 49 drop in factory activity amid a rapidly faltering post-pandemic recovery in China. But new orders and foreign sales fell for the fourth month in a row, while employment remained weak in China. Still talking about statistics and economics, the euro area inflation rate slows to 5.3%. The euro area annual inflation rate in the eurozone slowed for a third consecutive month to 5.3% in July from 5.5% in June, in line with market forecasts, preliminary estimates showed. It is the lowest reading since January 2022 due to a further drop in energy prices, while service inflation continued to march higher. Meanwhile, the core inflation rate was unchanged at 5.5% compared to forecast of 5.4%. It would be a good time to look at the charts indicating euro area inflation rates. The charts this morning. According to the chart this morning, as at October 2022, Inflation in the Eurozone was at 10.6%. It began to drop since then, and the decline has been consistent, indicating improvement in the cost of commodities, prices for commodities, and the euro itself becoming stronger. January 2023, inflation stood at 8.6%, and as at April 2023, 7%, and currently July, 5.3%. In Africa, Zambia's inflation accelerates to over 1-year high. The annual inflation rate in Zambia accelerated to 10.3% in July 2023 from 9.8% in June, marking the highest reading since April 2022. The upward pressure came from food, 12.1% against 11.2% in the previous month, primarily cereals, fish, milk, cheese and eggs, as well as vegetables. Meanwhile, costs grew at the same pace for non-food products by 7.8%, with the largest increases for clothing and footwear, pharmaceutical products and accommodation services. On a monthly basis, consumer prices edged up by 0.9% in July, following a 0.8% advance in June. Let's look at the chart indicating Zambia's inflation rate. According to the chart from the Central Statistical Office of Zambia, October 2022, the standings was at 9.7%, indicating inflation standings, but it began to go up and back and forth. 9.4% in January 2022, but hit a massive 10.2% in April 2023, and currently is going even higher at 10.3% in July 2023, indicating a struggle in Zambia in terms of cost of commodities and a weakness of that currency. Now to Zimbabwe. Zimbabwe's annual inflation rate eased sharply to 101.3% in July 2023, from a nearly 2.5-year high of 175.8% in June, helped by an appreciation of the 2009 due to 53% rebound in the local currency against the greenback amid new rules that required corporate taxes to be settled in the local unit and the loosening of the foreign exchange controls. The Reserve Bank of Zimbabwe raised its key lending rate on June 6th by 10 percentage points to 150% in a bid to tame cost growth. Also, the central bank stopped free floating of the Zimbabwean dollar to reduce volatility and erase the gap between the official and the black market. Let's move to the chart indicating Zimbabwe's inflation rate, the charts this morning. Amid the struggles in Zimbabwe, inflation has been consistent around the 100+ mark in Zimbabwe as at October 2022. The country with the worst inflation rate had 108.7% inflation standing, and it was consistent within the 100, reaching 101.5% in January this year, but began to slow down to 75.2% in 2023. 75.8%, a 2.5-year high, and it dropped back to 101.3% amid the strains of appreciation of the Zimbabwean dollar. But inflation in Zimbabwe is still quite high, and the cost of commodities very high. Quickly, let's look at the commodity market. Beginning with energy market, oil sets for best month in over a year. Nigeria's price benchmark Brent crude futures held above $84 per barrel today, and we're set to end the month sharply higher as signs of tightening global supply and improving demand outlook boosted oil prices. The international oil benchmark is up nearly 12% so far in July, its best monthly performance since January 2022. Markets fretted about voluntary output cuts by Saudi Arabia and Russia that are squeezing the market, with the former expected to extend its additional 1 million barrels per day cuts through September. On the demand side, analysts upgraded their global oil demand forecast for this year and next year, citing stronger growth estimates in major economies. Quickly, let's move to the market, the energy market, and see what the standings are this morning in the commodities, the energy market first. According to market reaction, it has shown some positivity and negativity, but the volatility level is quite low in the market this morning. US crude $81 per barrel, while Nigeria's price benchmark is $84 per barrel. Natural gas, gasoline, heating oil, all struggling in the morning market. The industrial market, the metal market this morning. Gold prices dropping by 2.63 points, negative 0.13 percentage decline. $1,956 per ounce is the price of gold. Similarly, silver is dropping slightly. Copper, a little here, a little there, but steel prices gone up by 10 points. 3,773 Chinese yuan per ton is the price of steel. Let's move to the industrial market. Well, the standings are in the industrial market this morning and the opportunities in it. Bitcoin has dropped points this morning. 3,848 Chinese yuan per ton is the price. Cobalt, no significant difference in the market. But that's the standing. Aluminium has gained 17 points this morning. $2,239 per ton is the price of aluminium. Let's look at what the market brings from agricultural perspective and the standings in the agricultural market quickly. But half of US corns and soybeans acreage are in drought. Co-founder agmarket.net Jim McCormick has more. Let's hear from Jim McCormick.
Corn and soybean production areas. U.S. Midwest is currently seeing some of the year's hottest temperatures. This heat, combined with the moisture deficit we've seen across the corn and soybean production areas, increase the potential that the upcoming crop is getting smaller by the day. As of late July, approximately 55% of the U.S. corn production and 50% of the U.S. bean production were in drought conditions. Corn is susceptible to yield loss due to the stress from production stage through the R5 dent production stage. Third, 68% of the corn crop was silking. The lack of moisture and extreme heat causes the soybean plant to drop blooms and abort pods. As of July 23rd, 35% of the U.S. crop was setting pods. Smaller and fewer pods are also a common result of soybean plants under heat and drought stress. Improved weather conditions will help stabilize the crop, but the time is running out.
It's the outstanding features regarding the agricultural market and the concerns within the U.S. grains and soybeans market. Let's talk about the agricultural market now. And afterwards, we'll look at the foreign exchange market. The agricultural market this morning. The agricultural market has indicated a drop for soybeans this morning, dropping 15.25 points, a negative 1.03 percentage decline. And wheat price 17 point drop this morning. Lumber 1.5 points, and palm oil has dropped 115 points this morning. Quickly, let's look at the foreign exchange market, the price of the euro against the US dollar, and afterwards naira against the US dollar. It's been massive gain, or not necessarily massive, but some gains. US dollar against JPY, the US dollar is stronger against the JPY, gaining 1.146 points, but the US dollar is of mixed fortune. 1.1 points is the mark for euro against the US dollar, and pound against the US dollar is at 1.828 points. Let's look at Naira's perspective in the morning market against the majors, the US dollar and Naira against the majors. Firstly, quickly we look at the black market standings for it. 872 Naira equaling $1 at the buying rates in the black market, and equaling $1 for the pounds to Naira. It's 1,183 Naira to the pound and 1,165 Naira to a pound at the selling rate. The euro to Naira current price is 955 Naira to a euro at the buying rate, and selling rate 935 Naira to the euro at the selling rates. We draw the curtain on today's edition of Business 360. Thank you for watching. My name is Blyden Okem.